Hi friends, hi viewers, welcome to Fibonacci channel. This is Karthikeyan. Hope you guys are doing great. So what we are going to discuss today. So today's our topic is very basic, um, basic level of price action. You can say that is candlestick. So we'll start with the very basic level. What is candlestick all about? What is the color of candlestick represents? How the candlesticks are helping us to do a trade. So this is what we are going to see in this video. Let's get started, guys. To explain the candlesticks, I am using Tradingview charts. So you can find this Tradingview link in the description, and you can go and take out your familiar script to understand what we are going to discuss today. So I have taken Tata Motors. So let's start our basic level of price action. So candlesticks or represents the price action of that particular point of time. So this is what the candlestick represents. So if you see, if you mouse over on any candlestick, you can get that particular candlestick's price action. Say for example, this 9:15 candle, the very first candle's price action. If you see on the top side, the O represents open. It opened at 331.05 and the high is 331.65, and then low is 327.5, and it closed in 330. So there are a lot of movements. That is called the price action of that particular candle and that point of time. So this is the representation of the price action on that particular point of time. So what the candlestick color code represents? The candlestick color codes tells us who is active in the market at that point of time. So the green candle represents the buyers are active in that point of time, and the red one represents the sellers are active in that point of time. This is a very basic information which everyone should know and understand. If you look at the candlesticks, it is in different shapes, it is in different types. So we no need to break our head on that in this point of time because it is a very basic level. So just understand what is candlestick all about and what is the information it is giving to us and how we are getting benefited out of it. The types of candlestick we can cover it up in advanced level. Anyway, that is not that important, but as a technical analysis, you should understand the candle, what it tells you. So very basic level is that green candle tells the buyers are active. The red candle tells the sellers are active on that particular point of time. That's it. Now, based on this information, how we can punch our order. Let's see a small example. Before that, I wanted to make a point that how do we decide the entry point? How do we punch our order? As I mentioned, the green candle represent buyers are active. So consecutive green candle represents the uptrend. So what it means? It means every candle's high will be broken by the consequent candle, so that the price will be moving higher and higher and higher, so that we can say that is the uptrend. The market is moving in upward direction. If the candle is red and then consecutive candles are in red, and every candle's close is lesser than the previous candle close, then it is a downtrend. Say for example, this candle's close is 330 and this candle close is 329 and this candle close is 329.05. So if you see, all the closes are less than the previous candle's close. So it means the trend is downtrend, and that particular point of time. So how we can make use of it and punch our order with this information? So one thumb rule here we should remember is, whenever the candles close broken by the other candles, then we can make an entry in that particular point of time. And we need to wait for the candle to confirm its close region. So if it is a uptrend, the previous candle's high should be broken by the current candle, and this close of this candle should be higher than the previous candle's close. That's how we need to identify and make our entry. Say for example, this is the very first candle of that day. So this candle closed at 330 rupees. The next candle opened 330 and it closed 329.35. Now the next candle opened 329.50. So if we see this, the previous candle's close is been broken by the next candle open. Similarly, consecutive candles are opened and closed. So the moment previous candle close is broken by the next candle, then we can make an entry, and we should wait for the candle to close. So this should give a confirmation about the trend. So if you see here 9:15, the first 5 minutes candle opened as a red, that represents the sellers are active, and then the 9:20 candle opens at the close of 9:15 candle, and that is also a red, and it confirmed as the downtrend is starting. And the third candle 9:25 candle again confirmed that trend is continuing, and 9:30 candle also confirmed that trend is continuing. So this close is being broken. So if you are an intraday guy, as soon as the candle open, you can punch your entry at 330 and keep your stop loss previous candle high, so that you can easily make some 2 to 3 rupees, 29 to 26. So 3 rupees in 15 minutes. This is a quick entry and exit. So entry, we decided that the previous candle's close should be broken. As soon as it is broken and the current candle's close is higher than the previous candle close, then we can enter our order. That is the entry point. So what is exit point? So consider this small trade. So our entry is here 330, and slowly it has reached to 326. Then the very next candle opened in the close of previous candle, but it closed at the open. So here if you see, the close is not being broken. So let me zoom it. The close is not being broken, and moreover it is a green candle. It means buyers are active. So next 5 minutes candle again confirmed the buyers are active. So this is the place where you should exit your trade. So 30 to 28. So 2 rupees. If you are trading this script in future, it is almost 7,000 quantity in one lot. So 2 rupees is a 14,000 rupees. So this is how the candlestick will help us to decide the entry point, exit point, and then stop loss. And also it indicates who is active on the market. So to summarize, the green represents buyers are active, the red represents the sellers are active, the candles high broken means the trend is going to continue on the upward direction. If the close is been broken by the next candle, then the downtrend is going to continue. This is all about the candlestick. Let's get one level advance. To decide when to enter and what is the exit and what is our stop loss. So if you see here, 9:15 market opened and sellers are active, clearly represents sellers are active for this point of time. And then again buyers are active for some particular point of time, then again sellers, then buyers. So if you see this is completely not telling us any direction, whether it is a upward direction or downward direction. The market is in uptrend or downtrend. It is not indicating anything. So to identify, in order to trade in this kind of range market, what we should is we should use the techniques called ORB, that is open range breakout. So what is ORB? So there are many kinds of techniques are there. So here if you see today's Tata Motor movement, you can clearly see the breakouts. So how do we identify the breakout? So the moment market started and then first candle completes, you just need to mark the high and low of first candle. So this is my first candle high, I just marking, and this is my first candles low. So if you see from 9:15 to 12 o'clock, it was in a tight range. The price was compressed in a very tight range between 331 to 327. So as soon as this range broken by any candle, that is our entry. So for example, if you see from this area to this area, it is in complete range. So let me highlight this. See this triangle. Till this point. So if you see this purple rectangle, the price is traveling in between this range. So that the moment it breaks this range, it gives a very nice breakout. So as soon as this range is broken, and then the very next candle opened exactly at the high of the previous candle. So it gives double confirmation that it is going to go upward direction. So we should enter at this price, that is 3, this candle's open price, that is 332.10. If we enter here, what will be our ideal stop loss? The ideal stop loss is previous candle open, or if you wanted to keep, this can be your ideal stop loss, or if you wanted to take some more and keep it, then this range, that is 327, is the very good stop loss. So our entry is here 332 and our stop loss is 329.27. Then what will be our target? So how do we define the target? So the stop loss is very important. Once you punch your order, the stop loss is clearly identified. Only thing is, during the live market, we will not be able to find out what is the target. So to finding the target, we will be covering it in advanced level. So this is a very basic level. So let's try to understand how we can travel with this trade, how long we can keep our position. So we entered here, then as we discussed, the thumb rule is we should hold our position until unless the previous candle's low has been broken. So this candle opened here, so we entered here, and this candle went up to 336, then came and closed at 335, and the very next candle opened here at 336 and went up till here and then closed at this price. So this candle didn't break our first condition. Our condition is we should exit when the previous candle low is broken. So the low is not broken, so this candle is closed. Then again the red candle, and then this is closed, but it didn't break the previous candle low, so we no need to exit. Then again green candle, and then it is closed at the same level. Then again red candle, and this candle also didn't break the previous candle low, and even this candle low, so we no need to exit. Then again one more candle, and then it is a green candle open closed here, then again another candle opened here and closed here, then one red candle, opened here, closed here, but it didn't break this big candle, but it broke this low of this green candle, so it is a kind of warning. So if you are a risk trader, you can still keep your position, or if you are a smart trader, you can exit as soon as it breaks this level. So if you are can ready to take risk, then wait. You would have waited, because this candle closed and the next candle only give the confirmation to exit. If the next candle is the red one and it closed below or above this candles, this one um, low, then we should exit. But next candle is a green candle, so we can still hold our position. Then again the same rule applied all over, not able to break the previous candle's low. Slowly it came, and then it was not able to break this previous high, okay, previous candle low. We keep, we need to exit, and finally went up, and then 346. So until unless, see, if you, the rule is not broken, we can keep our position. So the rule is, the candles the candle should not break the previous candle low. So the moment it breaks the previous candle low, then you should exit. So if you are a intraday trader and you want to book, always book the smart profit. So here the red candle formed, and it broke the previous candle low, and it is closed here. That is the confirmation. So you can exit. So when we entered in 332. Okay, 332, and we exited at 340. So 8 rupees. 8 rupees in Tata Motor is a good amount. If you are trading in futures, then 8 7 or 42,000 you can make it. So this is how the candlesticks help us to punch our order. I mean to enter our trade, and help us to keep the stop loss, and help us to decide the exit. So once again, I wanted to summarize about the basics of candlesticks. So green represents the buyers are active at that particular point of time, and then red represents the sellers are active at that particular point of time. Whenever we are deciding to enter, if the green candle is there, then buyers are active, and then the very next candle, or the consecutive candles high, is greater than the previous candle high, then that is a sign for uptrend. Whereas if the red candles close is lesser than the next candle, then the downtrend is confirmed. So this is how the candlesticks help us to know the price action of that particular point of time. That's all for today, guys. Hope you all could have enjoyed this video. Thank you, guys. See you. Bye bye. Stay tuned with Fibonacci channel.